Good morning, Vietnam, or whatever the phrase is. Hello. What up, everybody? Give me 1 second while we set up the mastermind slides. Had dinner arrive just a wee bit late, so we had to rush up, finish it, get the slides locked and loaded on this screen rather than on my laptop. Alrighty. We got 33 in here, most of the class here on time. Perfect. All right, everybody. Can someone just let me know in the chat that you can hear me? All right. Hi, Dad. I'm assuming that means you can hear me. What up, son? How you doing, homie? All right. Let me share screen. I need to load TradingView next to this because we are going to be looking at some stuffy stuffs today. All right. And share screen there. All right. So with that, there are 35 of you on. We have around 40 total in the class. I think 45 most with the moderators and everything that might be on. So hopefully everybody is able to show up a little bit later. And if not, I imagine they are on recording duty. So with that, welcome. Lesson fucking 3. I'm ready to dive the hell in. This is where I think that we really get going with the nuts and bolts of the trading strategy that we are going to be, that I really want to be teaching you all, right? And that I really want you to sort of adapt. And that's why you're here, right? Again, in my opinion, if you've been sort of like wishing for more out of the first 2 lessons, I think that you're taking a wrong approach to trading because those first 2 lessons have a lot of psychology and risk management in them. And I can't emphasize enough how important the psychology is. That being said, the technicals is the part that I know that all of you are excited to learn because I have a strategy that for me is the last strategy I'll ever find, right? The last one I'll ever use. I spent years going through YouTube, watching countless YouTube videos, trying to figure out different ways to get levels, different ways to do this, different ways to do that, right? And then eventually I read a book called Reading Price Charts Bar by Bar. I met a guy named Eric Marcus, and I started to work with him, learn from that book, learn from him and his strategy. And for me, I now it's not even on the table. People will tell me like other support resistance levels they use. For me, I don't care, right? I'm not gonna be rude, but for me, my levels are my levels, and there's nothing else that matters. My system is my system. I don't care what anybody else's system uses. I don't care to ever change it. People have asked me, Jake, do you think you're going to incorporate tape reading in your system ever? Do you think you're going to incorporate this? The answer is outright no. The truthful answer is I may adapt my strategy to different market conditions, meaning the different style of trades I might aim to take. Some conditions I might be more swing approaches. Some conditions I might be very scalp approaches, but my strategy remains the same. I will never change it. I will never deviate from it. The only thing I might do is add or tweak, but truthfully, I don't even think I'll add much stuff because it works, right? It works. And there's nothing from a strategy standpoint. It's very simple. What we do is very, very straightforward, but it works to the point where you won't have to go searching for it. So what I encourage you all to do is, because this is sort of a 3-part strategy, is like the next 3 lessons, right? In this lesson, we're going to talk candle analysis, trend analysis a little bit, and some pattern stuff. The next lesson, we're going to talk about levels. The next lesson after that, we're going to talk about multi-time frame analysis and tie everything together, right? So the next 3 lessons are extremely strategy focused. So what I encourage you to do is dive headfirst and full in. And whatever your previous strategy was, you don't have to abandon it. You don't have to abandon what you learned, but you're here for a reason, right? You used to use supply and demand zones. I want to encourage you not to use supply and demand zones anymore. Right? On some level, I do use like general supply and demand zones from weekly charts, but that's not my trading strategy. I don't say, oh, I was long off demand or anything like that. I encourage you to give those up. Right? I encourage you, if you're using any indicators, to give those up for the time being, right? Barring the 20 EMA and maybe the middle VWAP. I don't use either of those personally all that often, but if you have them on your charts, I don't disagree with you. Barring that, I encourage you to go all in, right? Learn this strategy and use this strategy. The people from Mastermind 1 who are having the most success, in my opinion, are the ones who have gone all in. There's some people who are still, I don't want to say they're on the fence, but there are people to this day where, they'll tell me about, I was watching for this thing to happen because now all of a sudden I trade opening range breakouts. And I'm like, that's great. but you're still struggling to find your strategy, and you did the mastermind, like just go and truly dive in and stick with the one that works, right? Not to say that mine is better, because if you have any strategy that works for you, it's a successful trading strategy, but you're all here for a mastermind for a reason, right? So, all right, I've ranted. You know me, I rant. This is how we do things here at Rake Trades LLC. We check the chat really quickly before we go in. I do have, I made sure to have Ron and Mike, and I'm going to be buying them some dinner tonight so they can be on here helpful answering questions. That being said, I encourage you all, to try and refrain from questions as much as you can, because like I'm probably going to answer it throughout the course of the hour. And if I don't, we'll for sure, hour, 90 minutes, we'll for sure cover it, and you can ask it again. But if it pops to mind right away, maybe hold back for a little while. Just that way you can really soak up everything that's coming on. So I saw one question that I really wanted to approach. Just let me make sure everybody's muted. I see. Participants meet all. One question I did want to cover, and this is just lesson 3. We have a lesson 4 kind of built into this one as well, was that Jennifer said, well, is there ever to be a day where the strategy won't work anymore? In my opinion, no, because we read price in charts, individually read them bar by bar. Unless candle charts change, no, our strategy will always be applicable, in my opinion. I don't think there'll ever be something where it doesn't work. So with that, we are going to review very quickly the triangle offensive system. We're going to skip past the support and resistance stuff because we've already covered that a bunch. Dive into trend analysis and review some common patterns. And then we're going to spend a whole grand total of maybe 5 minutes on those common patterns, because in my opinion, they aren't what you should be focusing on. You should be focusing on the structure of those patterns and the price action behind them, not the patterns themselves. All right, so again, just a reminder, we as a group, our strategy, we approach our trading strategy the same way the triangle offense approaches basketball. We react to what the defense is giving us. We do not try and force, a boxing, this is what's going to happen and I'm going to force on it. We are reactive, right? We are reactive, and it's very, very key to remember that. The other thing that's important to remembering are our 5 rules. And again, these rules we'll adjust them a little bit. We'll add more to them, but these are some core 5 ones that we've talked about already. The markets are always trending or ranging. There's no other options, trending or ranging. The break of a previous candle high or low should get continuation in either direction, and that will come into play big time tonight, right? Candle analysis is applicable on all time frames. That as well will come into play big time tonight. When what should happen doesn't, take that as a clue, right? And we're going to talk about the big time tonight with failure patterns. And the last one being markets move from level to level. The markets have a purpose. They aren't just meaningless price action that's random. They have a very specific purpose, and it is going from one level to the next. All right. So we have our support and resistance. We've talked about this each of the past 2 lessons. We have our 3 rules, right, about support and resistance, right? We have the knock, more times things tested, more likely it breaks. We have the Uno reverse, meaning when old support will likely become new resistance. Old resistance will likely become new support, Uno reverse. And then hit the body. I was very grateful that somebody suggested a better name than what I had last time. Boxing coaches, much as I am your coach, would tell you to hit the body, focus on the body, not the wicks. When it comes to levels in support and resistance, we are focused on the bodies of candles, not the wicks. When it comes to buy and sell setups, it's a little bit different. And we're going to talk about that tonight because wicks do matter. Had a little bit of confusion with that with one student last time. It ended up setting her back a little bit. So I want to make sure we have 0 confusion on that this time. Yeah, so those are our rules. We've talked about that. And now let's talk about patterns, because part of our strategy as traders is that we are going to be trading familiar patterns. In my opinion, it's just not the way that you've learned in the past. Most of you have learned what a bull flag is, a bear flag, symmetrical triangle, ascending triangle, descending triangle, which in my opinion is all some sort of flag, right? Everything's a flag, in my opinion, except the symmetrical triangle is more of a consolidation. But these are flags, and I put LOL there because people will teach you them like it's a flag to me. It's a flag, and we'll talk about why, right? But to me, I don't care about being like, oh, I'm gonna wait for bull flags intraday and do that and take I gotta wait for a perfectly formed bull flag and that will be my trade, right? And then wait for the breakout and the retest. That's not the way that I like to use patterns. I like to use patterns, and when I say I like to use patterns, I'm taking more of a broader note. We use patterns more as like a recognition device, right? Like we're able to recognize and see like, okay, this is how I move up followed by a period of consolidation, right? This is on the hourly chart, right? Things that we're familiar with, like we are pattern traders, just not the patterns that most people talk about. We're patterns as in what we see price action wise structure that gives us some sorts of sense of familiarity where we can predict what has an opportunity of coming next, right? We can predict and say, hey, we have good risk reward here, right? And dive in a lot more to that in just a few minutes. So the best time to use patterns, in my opinion, is for entries, right? There are times that these patterns appear on longer time frames, and those longer time frames patterns usually hold more weight than shorter time frame patterns, right? That is also applicable to the buy and sell setups that we will talk about. So patterns, in my opinion, are best used intraday. I do think that like you can have something bull flagging on the daily chart and stuff like that. You can have, daily bull flag and stuff like that. But if you're just the way I think of the patterns, especially these ones over here, my thought process how I use them, I like to use them for entries and on smaller time, on intraday stuff rather than swing trading stuff. But really, the most time that I use patterns is on relative strength and relative weakness plays. And aside from going level to level and having some sort of gap up or gap down play, which is what we play a lot of, a huge portion of the trades that we take, as I say, we as a collective unit, you all using this strategy now, are relative strength and relative weakness. What is showing us strength compared to the SPY or the QQQ? What is showing us weakness to the SPY or the QQQ? And oftentimes those opportunities present themselves in the form of a pattern. Right. Today's example on CAT isn't really great because CAT was a big relative strength play, right? But it wasn't the way that we would typically use, like, wasn't a 5-minute relative strength of the hammer. NVIDIA, on that day that we caught it with the massive move, that would be a great example of a relative strength play where it was extremely strong while the market was flat or struggling, right? And we'll dive into the charts and show that as exact example. So let's go through these four. And again, we're not going to spend very much time on these four because to me, they're all kind of the same. And again, what's most important about these is the structure of them rather than the picture perfect, picture perfect pattern, so to speak, right? So we have two main patterns that I focus on, bull flag and bear flag, right? For me, everything is kind of a bull flag or a bear flag in a sense, right? Because markets are always what? Two things, trending or ranging, meaning markets are always either moving up and then consolidating, right? Or moving down and then consolidating. They're making a trending move and then consolidating and then breaking out of that consolidation, which means kind of in theory, everything has the opportunity to be a bear or a bull flag, right? It just is dependent on whether those bear or bull flags succeed or fail, right? Because if this ends up failing and this ends up breaking down, then it's just a failed bear flag or bull flag, right? It's failed bull flag, and those can often represent some very, very nice potential trade setups in the market, right? So we really want to pay attention to when these things fail. Right. So again, the other thing that I will mention is that at some point in a bull flag, you are going to be going into the trend will change. Right. So in this example, let's say, we have this bull flag up here. And this is really the part about, on the flags that I want to cover because it's more about trend than anything else. When this moves up here, we're clearly in an uptrend. Right. That's why I'm assuming this is green. When this starts to pull back, it actually goes into a little bit of a downtrend, right? Meaning that we have a lower high here. We end up going down to a lower low. We rally back up to a lower high. So on whatever time frame this is, we actually have reverted into a downtrend. And this will be very key for what we talk about on next Tuesday. But I want to plant this seed all in your heads, right? Is that on this time frame, and let's insert some text here. 5-minute chart, bull flag, move up, followed by consolidation, right? And goes into intraday downtrend, right? For a brief time, this is in a technical downtrend right now. It's not like a short necessarily to me because it's assuming this is the opening price down here. We're so far above the open, it's more likely to be forming a bull flag than it is to be worth you trying to short it, right? But it does go into an intraday downtrend, but that's on the 5-minute chart, right? And on the 5-minute chart, well, it might go into an intraday downtrend. The hourly chart likely just looks like a big green candle and then a small red one, like an inside bar, setting up a 1, 2, 3 pattern of sorts, something like that, which is one of our favorites, right? So while we go into a 5-minute intraday downtrend, the hourly is just pausing or just getting a small pullback or a rest bar, right? Not even a pullback, but just more of a rest bar. But in order for the hourly to get that rest bar, this 5-minute chart has to go into a downtrend, right? It has to go into a downtrend because there are, what is it, 12 5-minute candles in an hour-long period. So for in order for one hourly bar to go small and sideways, and just for an example of that, let's flip to Caterpillar today, because I know on the hourly chart, this one had a bit of the 1, 2, 3 pattern, right? In order for Caterpillar to get this candle today, which is what this is exactly the type of thing I was talking about, right? Which was that this big move, a move up followed by a bar that goes sideways, like sort of like a rest bar on the hourly, right? Just respond in chat that this makes sense to me, to everybody, right? That you understand this sort of 1, 2, 3 set this basics, right? This is just two strong can trendles up and then a move sideways followed by like a little rest bar, right? That's just what we were describing on the other one. Makes sense? Yep. Just give me a few more yeps. I just want to make sure everybody's following along. You guys and gals aren't a very talkative group compared to the last one. But okay, cool. Right now, in order for this to happen, right? In order for these 12 5-minute candles to stay red, and again, we technically never broke above the high of that bar, right? In order for those to stay, in order for this hourly bar to stay red, the 5-minute chart had to go into a little bit of some sort of downtrend, right? And this is right around when we had a pullback that was kind of a funky pullback, right? It kind of looks like, hey, guess what, right? Right around here, we do kind of look like we might be going into a downtrend because that sets a potential lower high, right? We'll talk much more about that once we get into buy and sells. But this pushes up, right? And all of a sudden we've set a lower high potential and started to push back down. Right now, we don't get a new low on this one, so we never really flip into a full downtrend. And that won't always flip into it, but price does hold. And you can see the action on the 5-minute chart might be leading you to believe that a larger breakdown is coming. Well, if we flip to the hourly, it's much less likely, in my opinion, to be watching for that breakdown because of how strong this hourly bar, these hourly 2 bars was, and the potential for this 1, 2, 3 pattern, which ends up playing out perfectly, right? Like if you weren't in the swing trade on CAT, and honestly, I kind of fucked up because I wish I had posted something like about this 1, 2, 3. I watched it. You know, people could have gotten into a new pattern, or excuse me, a new day trade. Yeah. Okay. So Rob, let's talk about that real quick. The 1, 2, 3 pattern, because this is one of the patterns that I want to make sure that we talk about. 1, 2, 3 is very, very simple. Let's do text. This is going to be bar 1, right? The trend bar right here, and it's not letting me drag it on top of the green one exactly, but it's this green one right here is bar 1. Bar 2 is this small rest inside bar. Right? Bar 3 is this big green bar. So a 1, 2, 3 pattern. In its most simplest explanation, 1, 2, 3 pattern. It's actually, yeah, Christian, three bar play, 1, 2, 3. Very, I think they both. It's a 3-bar play as well, right? I've heard them called the same name. I just like the 1, 2, 3 pattern. 1 second. So 1, 2, 3 pattern, trend bar, followed by a resting candle, followed by trend breakout bar. Entry above bar 2 high, stop below bar 2 low. Okay, so there's a whole lot of questions firing in at once, and I'm going to answer all of them, but let's halt them for 1 second, okay? Because a lot of these are going to be the same, and I'm actually going to answer. I was going to answer all these as well, right? So, is it only important on the hourly? No. One of our rules, Kendall, if you will remember, is candle analysis is applicable on all time frames. All time frames. So this pattern is applicable on all time frames. Now, is it going to hold the same strength on a 2-minute chart that it is on a weekly chart? Absolutely not, right? Of course, the weekly chart is going to have a much bigger strength, right? However, will you see this exact pattern play out on a 2-minute chart? Absolutely, right? Candle analysis is applicable on all time frames, very important. Okay, at what point do you enter? So I mentioned that here. You enter above bar 2's high with a stop below bar 2's low. If this was a reverse trade to the downside, let's look at something like Tesla on the daily chart. We took this a few weeks ago. Here's the 1, 2, 3 that I have right here. You can see I was breaking it down for somebody else as well, right? We have bar 1 is the trend bar here. Bar 2 is the resting bar right 3 right here, right? So our entry would be a break below bar 3's low, bar 2's low, excuse me, with a stop above bar 2's high. So it does not matter up or down. You can trade this one in either direction and it works, right? That being said, these patterns, a lot of people, here's the other thing I'll say about the time frame stuff. These patterns will appear a lot throughout the day. So if you're trying to take every 2-minute 3-bar play or 1, 2, 3 that you see, you're going to eat a lot of stops because they fail. They can fail, right? We'll talk about failures a lot more, in the next 20 or 30 minutes, but they can fail, right? These patterns can fail. So I don't want you to be getting this sort of idea of like, holy crap, I want to trade 3-bar plays all the time. I love 3-bar plays, and there's actually some other people always bring up to me the strat. I don't know what the strat is. I never looked into it or used it, but I looked into it one day, and it's essentially the guy loves 3-bar plays. That's all he does, is he just waits for 1, 2, 3 patterns, right? And so there's people who literally will only trade hourly inside bar breaks or daily inside bar breaks, and they work. They really do work. This is one of the goats out there, right? So we were going to cover it in the next lesson, but we're just going to cover it now because there's a lot of questions. So let me go through this chat really quickly. Does the resting candle need to be an inside bar? Not necessarily, Victor. And an example of that would be, there was another Tesla one from the other day on the daily chart where was it? Right here, bar 1 was right up here. Bar 2 was bar 2 was right here, right? And it had a little test lower, but bar 3 was still slammed down. Bar 1, 2, 3 pattern totally played out. Does not need to be an inside bar. Preferable though, in my opinion. I prefer an inside bar, right? Why? Because the minute we test lower than the previous bar's low, it at least has the potential to fail to go lower, right? If we broke back over this candle's high, now in my opinion, this Tesla was so weak that might have in and of itself had failed and pushed us down, right? But at the time, this candle, because it tested lower than the previous day, does have a little bit more validity of like rejecting that selling beneath there, right? So that's an important thing to note as well. Okay. Julian, how do you know if it's a 1 bar, 1, 2, 3 pattern? Is the way to identify the first bar? It has to be a trend bar. It's a trend bar. I don't fully understand that question because it's a trend bar. It's a trend bar followed by an inside bar. And then the third bar is usually where you'd enter off of. Okay, I see that Mike and thank you very much, Mike. And what defines a trend bar? A big green or big red candle. A big green or big red candle, right? It's just something that has some sort of big red or big green. Yeah, so sorry about that. I guess I should have clarified that as well. A trend bar is a big red or green candle, right? It's just because if it's big and it has a color on it, that means it, especially on a daily frame, that was trending that day, right? It might have been really choppy on a 5-minute frame, but on a daily frame, these red candles are trending, right? All of these ones are big red trend bars. So big single, they don't have to be huge, but you do want them to be relatively big for a 3-bar pattern. Yeah, the bar by bar stuff the bar by bar stuff is a tough ass book to read. You'll understand some of it, like a 1, 2, 3 pattern and stuff, but you won't know buy and sell setups. Okay, so I think that we're all caught up. Okay, I think we're all caught up in live. Everybody's all good. Here's that, Julian. So a trend bar is basically the same as an inside day on the hourly. No, Kendall, we're gonna talk after because I think you're a little confused. Trend bar and inside hourly would be a little bit different. Tony, so including bodies and wicks. So yes, for these particular ones, you would use the wick as your entry, and that is going to be a great leeway into our buy and sell setups. Is that when you are using the 1, 2, 3 patterns like we have on Cat's hourly chart here, if you are playing the pattern off of the hourly and actually entering off of this chart and everything, you would wait till we break above the high of the wick, right? You really want to confirm that we break above and sort of set the trigger, because there will be, the theory is that there's buy limit orders above that, right? In theory, some traders aren't even going to be watching. They're just going to place an order 2 cents above this candle's high and a stop below its low, right? And they're just going to say, hey, if my order fills, it'll take me up, right? So I don't use buy limit orders, but that's the theory behind it. So yes. And yes, and that the stop would be the lower one. Again, everybody, so an entry above the high of bar 2 and a stop below the low of bar 2, right? And it's not the body, because in this case, if it was the body, your stop would be like, 5 cents, and that is, it would be too tight, right? It'd be too tight. So you do want to use the wicks, not the bodies, when it comes to stops and entries. And we're going to talk about that right now. Okay, so let's roll back to the slides a little bit to get back to where we were, right? So again, just to sort of recap, let me put one more text slide in here. Insert text box. Okay, I'm closing the questions chat. I'm going to put it back on Mike and Ron, and I am going to go back into presenting mode. Okay. So in this example, right, again, in order for the 5-minute to go into a little bit of a bull flag or get the hourly pullback, the 5-minute chart would need to go into a downtrend for that, right? So that's kind of the main purpose of why we just went over the charts to try and dive into that as well. We got a little sidetracked with the 1, 2, 3 pattern, which I think is a very useful thing for us to talk about. So I need more water. Hold on. So after that, we have the next 3, which I don't want to spend any time at all talking about, because 1, you can look all 3 of these up and they will all find very easy definitions for you and stuff. 2, a bear flag is exactly the same as a bull flag, just upside down. So all the same principles that we talked about are applicable. Same thing with the 1, 2, 3 patterns. That's why I showed the downside plays on Tesla. So the difference is a bear flag is a move down followed by a period of consolidation, right? Same exact principles in everything we just talked about as a bull flag, except in reverse, right? Now, ascending triangles and descending triangles, you'll see them sometimes, but in my opinion, it's just a period of consolidation after some sort of trend move, right? So for here, we've made a move down, right? We start to get this period of consolidation with a flat top support, right? And some sort of series of lower highs, right? And this, you can see the difference between this and a bear flag, right? Or this and a bull flag, excuse me, is a bull flag has to go into a down, or not has to, but sometimes will go into a downtrend, right? In a 5-minute or smaller time frame downtrend before it breaks out. Ascending triangles or descending triangles stay with their trend, right? So this one is setting higher lows. It's just at a flat top resistance. It makes perfect sense that knock, hello, right? Makes perfect sense with the rules that we're talking about. You can also note here, higher low, higher low, higher low, higher low. So these are with trend potential patterns, right? And so these are continuation. So with that, I want to move on to the bulk of what we're going to be talking about tonight, the meat, the bones, some trend analysis, and then we're going to be talking with buy and sell setups, which you'll see have some sort of similarities to the 1, 2, 3 patterns that we are talking about, right? So last questions, check. Beautiful confirmation of information. Okay, so with that, let's do it. All right. So we talked about this slide a little bit in the very first lesson, but I wanted to revisit it before we dive into the chart, right? Almost all of our trades are based off of trend analysis. In my opinion, this is kind of the most important thing, right? Because we are with trend traders, right? We are with trend traders. So the way that I read the market is that I'm constantly examining on all time frames, what is the trend? Are we making higher lows, higher highs, higher lows, lower highs, right? And again, you might think that you've learned all this before, but how I use it to find trade opportunities is not how you used it before, in my opinion. Otherwise, I don't know if you would be here, right? We then combine this trend analysis with candle analysis that allows us to have extremely high risk reward based on where we are able to place our stop on that trade, right? So trend analysis is how we determine if there's an opportunity on the chart. Candle analysis is what we will use to find our specific entries and then manage that trade. If we can identify potential higher highs, higher lows, and lower highs, then we can use specific candle patterns with one candle stop losses as our entry points. And it is very nice to do that. So again, the three pillars of our trading strategy, right? We have candle analysis by finding a buy or sell setup, finding a failure pattern, trend analysis we just talked about, and then levels, right? These are our three pillars. And tonight we're going to focus on these two, right? So with that, let's dive into one of the charts that I love to use for this lesson, which is MRNA, because I had an amazing trade on it last year, a couple of different times. And it had just awesome daily structure. And this was a trade I used to make like 600 or 700% or something like that. And it didn't even hit the target, right? And, so with that, let's dive in. So you can see here we have mRNA, and with this mRNA movement, we're going to start back here in November, 2020-ish area. What we see is the development of an uptrend, right? We are developing a daily time frame uptrend, setting higher highs, right? Setting these higher highs, again, pulling back and setting higher lows, right? Setting higher lows, and then eventually getting the breakout of this and kind of going parabolic. But while going parabolic and while having this massive move, the structure that mRNA formed remained the same and remained very technically sound. And it was an excellent trader for much of 2021, one of my more profitable tickers, even before the earnings dump. The earnings dump is not the trade I'm referencing, everybody, by the way. That 600 or 700% is not an earnings dump earnings dump trade. So as you can see here, developing and sort of diving into this chart, we see all these areas, right? And right here, we see higher lows set. We then break to a higher high here, right? I'm hoping this is all making sense to everybody with how charts move. It's very basic, right? In an uptrend, the principles of an uptrend, we are setting higher highs and higher lows. That's the principle and the definition of an uptrend. It's very simple. I imagine everybody is familiar with it, right? And you all learned this probably in the first day or two that you learned trading, right? But out of the way we use it is every single time frame at all points, we are examining what is the motherfucking trend, because trend breaks, flips are where we're able to find these sorts of opportunities. So you can see here, we have a strong uptrend in mRNA, and then eventually it goes parabolic, right? It goes parabolic, and up here is where we set our first, or our biggest, we'll call it, higher high, right? This is a confirmed higher high. The stock has never traded this high in its life before eventually it stops and it pivots and starts to move down. So we have our reference point. This is our reference point, right? This higher high mark is our reference point. That now is the battle that the next time that we get a strong push up, we need to break over that to maintain the daily uptrend, right? To maintain the weekly uptrend, most importantly, as well. Right. So I'm imagining that this is making good sense for everybody so far, right? From here, we get a pullback on the daily frame. We get a big red bar, inside bar here, inside bar there, and then a break to the downside. And here, at this point in time, when this big green bar takes out the high of this previous little red bar and hammer, that is where at the first time we get our very first PHL. And you're going to hear that term a lot. You've probably been seeing it a lot in the chat. That is potential higher low. Now, why is it a potential higher low and not a confirmed higher low? It remains a PHL because until we break back above this higher high, we don't know that this is really a confirmed higher low, right? If this was a confirmed higher low, it would be back above the previous higher high there. That's what confirms it, right? So why is this P? Because we've never gotten back above that high, right? And at the time of forming this, we didn't know if we were going to or not, right? So for me on Moderna, after this parabolic of a run, this giant, I mean, the thing had gone from 300 to 500 in just a couple of weeks. I was not eager to buy the first pullback here, right? And this first push up. I wanted to see if we could develop a little bit of a range here and see where the price action would take us, right? And that is exactly what we did. And what we did was let mRNA just establish a little bit of a resistance box up here, right? And it goes from trending mode to a little bit of consolidated mode, right? Markets are always one of our rules, trending or consolidating. Here we're trending, here we're consolidating. I'm putting the box up here at the upper resistance area, but you could draw this box and it would be just the same, right? Because we're in a box there and we are kind of trendless at the moment, right? We have a couple pullbacks back towards here. We have a pubs up here, but we develop range, but at no point do we put some sort of range break in action until eventually on this day here, we pull back and establish a bar right in this sort of area. And mainly, right, it had held and pushed towards right into this area, right? So when this daily bar closes, where it is relative to this potential higher low right here, where it is right there, I'm looking at this thing and saying, especially with this little range that we've developed here, I'm thinking this might be a PHL, a potential higher low, right? And for me, this was the day that I was like stalking. I was like, okay, my eyes are all on this thing of mRNA. Why? Because if I can use a daily chart candle as my stop loss, right? Which granted is a big stop depending on the expirations that you choose, the type of way that you decide to trade it. Because if we're using this as a candle to stop, our stop isn't below like 360, right? However, if this holds as the potential higher low from a market structure perspective, we would be looking at a target up here at 500, right? So if we calculate a risk reward on something, even if we have to buy this above this candle's high, right? Stop above this candle's high, a stop below this candle's low, with a target up here at all-time highs. This brings us to about a 4-to-1 risk to reward ratio, right? Especially with the IV and the options, I think it would have been a very favorable thing. And again, this is if we buy above this candle's high and really sort of we don't wait for any other price action to be indicative of it, right? And we keep a stop all the way beneath this low. Again, it's coming up on about a 4R risk for a swing. And that was to me something I was really looking at, right? So with that though, instead of just immediately buying once this PHL had formed, I decided to wait for a little bit more price action. I decided to wait for a little bit more price action and see what would happen, right? But I was willing to buy if we broke over this candle's high, right? If we broke over that candle's high, I was willing, and we're going to talk about that with the buy and sell setups in like 3 minutes. But if we broke over that candle's high, similar to the 1, 2, 3 pattern, that would have been a trigger to me to potentially look to enter that trade, right? Now, what happened that day, and I remember watching it very carefully and very specifically, was that it ended up being an inside bar, right? It ended up being just a pause bar, it ended up being just a chilling bar, just rested. And I loved that. Why? Because now if I'm going to use this inside bar as my entry, right? All of a sudden I can tighten up my stop even more, right? Even more. Right? If I want to take a long position and use this bar as my entry, I can take an entry over this bar's high beneath the inside bar's low, right? Now, again, with a swing pattern or a swing trade like this, I would probably have given it the room, just down to this previous low. But from a technical rule perspective, from an inside bar perspective, it was a valid reason to keep your stop beneath that candle's low. Now, all of a sudden, our risk reward goes from a 3-to-1, 4-to-1 up to an 8-to-1, right? Whoo, that's a nice, that 8-to-1 risk reward is nice. That is nice, right? So for me, what I did was I looked at taking calls over the break of this inside bar's high right here, right? Just a little break of that high for this box, right? With a stop beneath its low. The thesis of this trade was a potential higher low on the daily time frame, right? Going and look to standing up to break this little range's high and ultimately get back up to new all-time highs, get back up towards the new all-time highs for a price target, right? Now let's break down. I'm going to pause real quick and go through some of the questions. But it's looking okay, looking okay here. Why is that bar an inside bar, right? So Gabriel, thank you for answering that. Yeah, so it's inside bar. I don't know which one. Oh, this bar right here, which one you're referencing. This one is fully inside the previous day's range, right? So that by definition makes it an inside bar. It's fully inside the previous day's range, right? It doesn't have to be the body. It is just as long as it is fully inside the previous day's range, it is still an inside bar. So good clarification. It does not have to be the body. Good question, right? So let me see. For the inside bar, does the body and width? Okay, so now I understand. Yeah, it has to be fully inside of the previous day's range, though. Otherwise, it's not technically an inside bar, right? Because if it's even one tick beneath the low of this candle right here, all of a sudden, technically, it's potentially like a failure. We traded below it. It's not technically an inside bar. So you do want to keep those fully inside the previous candle's range, right? So this was the thesis of my trade. And what I want to do really quickly is sort of walk you all through, from a price action perspective, why I didn't even really watch this trade and why it was a very stress-free winner, right? We have this sort of box up here at a resistance level, and there was an hourly level from the hourly chart. I'm sure I don't remember what it is off the top of my head now, obviously, but this was an area I was watching, not necessarily to trim, although I'm sure we did trim a small portion of it, but this was the area where I was watching. This seemed like the only area where we'd have much trouble before I push back up towards the highs, right? So as we broke over this area, right, the swing trade from here, it's working. As we break over this area, I can also start to trail my stop up on this trade, right? So I originally had the 8-to-1 stop there and the entry here. Now, as we continue this trade, I can move the stop up, trailing under previous day's lows, trailing under previous day's open, right? And tighten that risk reward up and tighten it so that you guarantee a winner as well. But for me, there was no real reason to close full position on this through any of these first few days of action, right? And this is why it was one of my best trades, of all time, just not from a dollar perspective, because I wasn't trading huge size with it, but just from like a percentage and from an execution perspective. I was able to hold this, right? Because no reason to sell, right? Here, no reason to sell. Granted, I did have to hold through a small gap down, but it didn't really affect my contracts. No reason to sell. Guess what right here on this red bar right here? What is this red bar? What is this candle? Gold star points to anybody who answers it. Bang, bang. Love you all. You're picking up on it. You can see it, right? There's absolutely zero reason to close your position on this particular trade here. It's an inside bar pause day, right? And I'm actually pretty sure what I did was I day traded this the next day off of this 1, 2, 3 pattern. It was gorgeous as I day traded it into addition to my swing, right? I day traded it in addition to the swing. Now, I kind of having that there kind of maybe screwed up a little bit, but why did I take some of my position off on this gap up right here? Let me see this. Okay. Why did I take off my position right here, right, on this gap up in this sort of move right there. What's the reason for that? As opposed to this candle right here, right? We just had a very similar candle in terms of size, right? Let me see. This one was 4%. This one was 3.5. This is actually smaller than the previous one, right? So why did I close, or why was our strike resistance on this one? Risk reward. Okay, risk reward. Danny, I'm gonna give you bonus points because that's not the answer I was thinking of. But at the time, had you calculated risk reward, that played a role in it. So yes, you're right, and you get double bonus points. Above huge trending candle, not sure. Gaps up are for selling, not necessarily. Was right, Joe. So exactly, Justin. So these are good. These are all good answers. These are all good answers. These are all good answers. All of the sudden, the main two, I should have asked a better question. I should have, that's my fault because those are all good answers. I should have rephrased the question. So I'm going to do that now. So we're going to start after after Jennifer's answers of it is a lower high right here, which is not wrong, but not the answer. Again, that's me asking the wrong question. So pause those answers, answer this question. What's different between this bar and this bar? What's different between this bar right here and this one right here? Exactly, Junior. Exactly. Right? Not an inside bar, not an inside bar, not an inside bar. Exactly. No buying wick that broke, break previous days. Exactly. Gang, gang, gang. Revert back to one of our rules, fam. The break of a previous candle, high or low, should get continuation in either direction. Right? On this gap up, that does not happen. And all of the sudden, right? All of the sudden, this becomes a what? For the very first time, a PLH, a potential lower high on the daily chart of mRNA that could shift this thing into a daily downtrend, right? Now, if we look at what comes next, or let me finish off my position there. So I closed off a bunch on this gap up once we I remember very vividly, it slammed down really hard beneath the open and it couldn't get back above the open. So that is an example of how I managed it on a smaller time frame despite using daily chart analysis, right? So I manage it on that time, but then I don't close full on this move just because, hey, just like we saw with Tesla that one time, right? Hey, Tesla had this thing the other day, this 1, 2, 3 that we traded right here, this 2. That technically had a lower test, right? Now it wasn't a failed gap. Those are a little bit different, but technically it had a lower test, right? So in theory, it's not just because it has the lower upper test doesn't mean it's instant fail, right? Because very easily what could have happened on mRNA is the next day gets a gap up or some sort of other price action that takes out its high, right? And we continue up and keep going, right? That could have for sure happened. Right. So I don't close full there, but I did take most off. And I remember I was up a bunch, we up like 500%, and I left runners. Right now, I closed my runners on this trade the minute that we opened up beneath or gapped down beneath and broke below the low of this bar. Right. Because once we break below the low of it, right, that kind of gives us some sort of layer of confirmation, so to speak. Right. That this bar is getting more confirmed. Right. If the next day had been an inside day on this red candle, I don't know that I would have sold necessarily, right? Because it's just an inside bar. It could be continuing the trend back to the upside. But the fact that we broke beneath it here is giving me a real reason to close position full. We bailed on the runners. But yeah, it was great. Bang, bang, boom, skedaddle out of there, right? Now, what's really interesting about this mRNA chart, and I wish I had taken it more fucking seriously at the time, but it was also a very bullish market, so I didn't want to run in the Freud number 2, by the way. I did not want to be like diving into short positions super eagerly. But I lost my train of thought there. This ended up being the potential lower high that mRNA never got back to, right? You can see from here, right? We pull back, kind of pull back and set a new pivot on top of this previous box area. Makes perfect sense, right? Why does that make sense? Why? I'm not even checking the question box because I know you all know this. The Uno reverse rule, right? again, building off of these rules that we have talked about, when a previous resistance area is broken, it should, not always, but should act as support. So boom, we see the Uno reverse principle in play here, acting as there. I actually do remember that I tried a couple longs here, caught a couple scalps, just thinking we were maybe coming to take this area out. No swings for me though, until we got back above this, because we could be in an unconfirmed potential downtrend, right? Then all of a sudden we get this price action bar on this day right here. And what that does is set the stage for mRNA death. I don't know if it had news that it was associated with some of this drop. I assume so, but truthfully, I don't think it mattered, because I think that this thing was going to be an aggressive sell side down no matter what, based on the strength that it had had and the parabolicness that it had had to the upside, without forming any actual market structure, right? In any sort of previous resistance areas to try and hold on to and grasp to for fucking support. This thing had nothing, right? And as soon as it broke beneath the previous lows of this little new box that it had formed from here, right? And again, this is an example of what I mean when I say I don't trade supply and demand. Like, the reason for me entering the trade will never be supply and demand, but I do use it on like a daily. I use them as reference points, is what I call them. I don't call it supply and demand, it's reference points to me, right? We have some sort of reference points, little box here, right? And to me, then that reference points, once we break below these previous lows, all of a sudden, we're not holding the higher lows anymore. As soon as we stop holding the higher lows, boom, death, absolute death, right? And this is all a market structure trade. Didn't catch the short on this one at the time. I believe this was in September, October, when the market itself was still super strong. This was just an overextended COVID name. So it wasn't super interested in shorting it, but I do remember we caught a few day trade shorts on it back in the day. But again, this was during prime all-in long season. So like, I didn't even care about shorting a weak name. I was just trying to, how much Amazon and Tesla can I buy? Because it won't stop going up season, right? Does that make sense to most of you all in terms of the market structure, the higher lows, the higher highs, the, all of that? Because again, you all probably learned that in your previous, in previous classes, or not classes, but courses, maybe even a mentorship. I'm sure you learned that, but I would genuinely be surprised if you learned it the way that I just taught it, in the sense of actionable trading items and using it to really form your theses, as opposed to just, oh, I learned it and then I started using supply and demand, so I don't really use the trend. It's like, no, you always have to, because guess what? This is applicable on all time frames, right? So on a 2-minute chart, this is the same type of thing that I would be looking for on a 2-minute chart to buy a pullback of a strong move in a relative day, is to buy this 2-minute higher low here, right? This is the same exact thing that I would love to be doing on a 2-minute chart. So we use it on every single time frame, right? So unless you've learned it with the intention of using it as specifically as we use now, this may seem like repeat information, but it's not, right? But now let's get into even more nuts and bolts, which is, Jake, what exactly can I use for entries with this trend analysis, right? We've talked about trend analysis. We've put it into context. How the hell do I use it to make trades now, right? Let's do it. Okay, I'm gonna close the question box. Last one I see are supply and demand consolidation areas. Yes and no, not always. Depends on who you're asking and what you're, for me, kind of yes. I don't use supply and demand, so I just call them like zones, right? It's just kind of like a zone of like a structure here. But like I said, I would have a specific hourly level that I'm going to be watching for this zone, right? So those come from the level. And yeah, that is a great, right? And that Ali mentioned this in the interview. This is great tip. So I'm glad I didn't close the question track. Okay, is that homework for you all throughout the course of the next, until we meet again on Thursday, is I want you to be marking out on 5 and 2-minute charts, 15-minute charts, 5 to 15-minute intraday, PHL, PLH, LH, lower high, right? Because you can see as this stuff works, right? From here, mRNA remained in a downtrend, creating a lower high there, excuse me, a lower low, rallying into a lower high up here, coming back down to a lower low, lower high. This shit works, right? This shit works. So I want you to map it out on all the time frames. Last little tangent and side bit I'll go on before we dive into buy and sell setups. is that you can see right here, we have a bear flag forming, right? So even on the daily time frame, at some point, this does look like potential higher lows are in place, right? And it could be trying to flip and stuff like that, right? But then you flip to the weekly chart, and this is where we caught the mRNA short. This was my first mRNA short that we caught that was like blew me up on Instagram because I made like 50K. And what I did was that on the daily timer, just like we were talking about earlier, right? Literally is exactly what we were talking about earlier on the bull flag picture. This is a bear flag on the daily that does go back into a smaller time frame. It's not a small time frame, but smaller time frame uptrend here. But on the weekly chart, it does nothing of the sort, right? On the weekly chart, get this box, get this bear flag out of the way. Even though this was the bear flag that I shorted into earnings, that was exactly it, why I took it. On the weekly chart, we have not flipped back into an uptrend, right? The weekly chart is just getting a pullback, right? This is, or a rally within a downtrend, right? I'm going to write that in text just so nobody gets confusion. Pullback equals reversion from trend, right? Revert. So if something is going down here, right, a little pullback here would just be the couple of rally candles up, right? It's just pulling back from its downtrend. That sometimes confuse people because you can be like, why is it, what do you mean pullback? It's moving up, right? So just to clarify that. But you can see here on the weekly time frame, this was bear flagging. This was not going back into an uptrend. We were testing previous little support, little box here, right? So while the daily might have flipped to a uptrend, over here just by setting a potential higher low like right here, all that, and maybe you could have scalped that range, but on the weekly time frame this was ugly and it had remained in a downtrend at all times, right? Does that make sense to everybody? Let me pop over to this. Okay, cool. Okay, Tesla does look like a little bit of a bear flag here. The only thing for me with Tesla is that it has a lot of support. It really consolidated hard in this area. It has an area right here. This is a strong green trend bar, so I don't see the bear flag as much on this particular chart. However, this is a move down and it's followed by a period of consolidation. I would just want this to consolidate a little bit more for me to call it like a clean bear flag. But by definition, you know, it is, right? So, okay, let me get back to mRNA. And you can see I have my own, look at me, everybody. I drew these out myself. I drew these candle pattern stuff out myself. So now that we've covered that, and now that we've gone down and done a breakdown of trend analysis, right? Let's go back to here, right? In order, again, we use trend analysis to determine if there's an opportunity within the chart, but candle analysis is what we use to find our specific entries. If we can identify higher highs, higher lows, lower highs, we can use specific candle patterns to find those entries. And those candle patterns that I use are called buy setups and sell setups. Now, let's talk about what these are, because these will be a huge portion of what you all are going to be needing to understand to get into trade, right? Or needed to understand the strategy. So it's important to understand that these buy setups are most applicable during with trend plays. If something is stuck in a trading range, then these are less likely to be as effective, so to speak, or you're more likely to see these fail. They'll still play out, but it might be a failed buy setup, right? Which failure buy setups happen, and we often can use those in our favor to look for short entries and stuff, right? But when something is having a trending day, these are gold, and you can hammer buy setups, and you can take great entries, and they will really provide you with some awesome opportunity, right? Now, what is the definition of a buy setup? This is our firm definition here, right? So that during an uptrend, you wait for a pullback to establish some support, and then take out the previous bar's high. Right. So in this example here, we have a move up, right? A strong move up, 1, 2, 3 trend bars, 3 strong green trend bars. Then we have a sideways move, a pullback here, right? That does come down here and establish some support. How do we know it establishes some support? Because one, these little tails don't hurt. But the other thing is that this bar turns and pivots and takes out the previous bar's high, right? Now we're going to talk about the red to green and all that because that will be an important thing for us, right? But as this candle breaks and closes above the previous candle's high, this is where we would look to take our entry on a buy setup, right? This is the candle that we want to buy on. This is the one where we say, okay, I want to get in because I think this is going to continue moving up. After something has, during an uptrend, it has pulled back, established support, and takes out the previous bar's high. Right now, we're going to talk a ton more about this, so don't worry. A sell setup is the exact same thing, just in reverse, right? These are most applicable during with trend potential plays. I see the chat box going up wild right now. And I see a few different things. I encourage you to pause. Kendall, I see you're asking a lot of questions. Pause for a second, bro. Remember what we said about I'm going to answer all these questions naturally within the PowerPoint presentation. So let's try not to fire off, a ton of them as much. If you have one, don't hesitate to ask it. But yeah, remember, I'm going to go through the natural flow of this, right? No, Kendall, I don't want you to do that. I'm not asking you to be quiet. It's okay, bro. I'm just saying, remember, you actually will learn more if you just listen and follow along. And then these questions, write down your questions, right? And we can cover them afterwards as opposed to stopping and not paying attention to focus on that question, right? Just write down the questions that you have. Yeah, and if something comes up, right, then, or if you have something that's like you just genuinely just don't get this, then don't hesitate to ask. But I encourage you all to be a little bit patient, not just you, but everybody, a little bit patient with it because we're going to cover it. The one question I did see that I wanted to answer, now I've exited the question box again, is how do we know whether it's a full-on reversal versus a pullback within a trend? You don't necessarily know that just based off the price action or just based off this, because, like, for example, this is moving down here, right? How do we know this isn't a full-on reversal to the upside as opposed to just a pullback, right? One, we can't really know because unless it sets a new lower high, right, it would have to get back over like up here or up here to get back into an uptrend, right? So that is why we wait for the candle patterns to give us that entry, because the candle patterns allow us to establish where our stop is. And that is what matters, right? That's what's key, is establishing where our stop is. So a sell setup, very similar to a buy setup, right? And very similar to a buy setup is that a sell setup is during downtrends, we wait for a rally to establish resistance and then a bar that takes out the previous bar's lows. So here you can see we have a strong downtrend. We get a 2-bar rally and then a sort of resting bar here. This bar does kind of test about higher, right? And the reason I chose this one is because this candle here is actually an example of one that broke above the previous candle's high, right? So if we are following our buy and sell setup system, right, let me flip over. I can't do that yet. I can't tell you which chart it is. When this, and let me see where I'm trying to draw in tools. Okay. Let's see if I can do that. Okay, so we're going to set this here, right? If we are using our system here of us waiting, right? Again, we're going to cover it. During a downtrend, wait for a rally to establish resistance and then a bar that takes out the previous bar as well, right? So with that, I need to edit this a little bit. Right, our stop on this trade is going to be above this little, I can't get it perfect, but you all see the candle I'm referring to, this little middle candle's high, right? That is where we are going to place our stop on this trade. Now, I don't remember what exactly was happening. I wasn't watching this chart during this time, the one where I got the example from, but I imagine this chart, this candle here, this bar tested above first, then came back down to break its low. It wouldn't make sense to me that it breaks its low, then goes and stops people out, then comes back down to close at the lows. You see what I'm saying, everybody? Because technically it triggered the stop, right? Technically it would have broken right there, but it didn't do that. In my opinion, it wouldn't have done that until after you got in, because it would have been weird to go down, get you in, up, stop you out, back down to work. Markets are weird. That will happen sometimes, but for all intents and purposes, we're going to assume that, this triggered down here. So at this point, our stop on this trade becomes a break back over this candle's high, right? And our trigger to get in this one was a break beneath this candle's low. Now, a common question that you will get, I will get in this is, and I'm sure it might be popping up right now, Jake, do I wait for this candle right here? Do I wait for this one to close before entering the trade? No, we already waited for this candle to close. This is the candle that we waited and let close. This candle right here is a very important word. This middle one is our signal bar, right? And that is very big. I need to shrink that. But the middle candle is our signal bar, right? And I'll move this over here. This middle candle is our signal bar. That is the candle to us that is signaling there is a potential trade in this direction in that we can take that be, you know, and have it be potentially work in our favor. The second candle here is called the entry bar, right? The signal bar is what gets us in the trade, actually tells us that the trade is valid to be taken. The entry bar is what gets us in the actual trade itself, right? So what we do is we wait for the signal bar to close, and then we use the entry bar to enter. So our signal bar was the middle one right there. Our entry bar is the break beneath its low at the stop above there, right? Now, I'm going to pop up in the questions chat box really quickly. To trigger, does the candle have to break the signal bar high or the first candle open? It's the wick here. So this is where the confusion sometimes comes, because we, on levels, we use the bodies. This is the one part that I mentioned that one person last time got a little tripped up and it fucked with her for a little bit longer than I wish it had, a lot longer than I wish it had, is that on levels, we use the bodies. Don't worry about that for now. We're going to talk about that next time, right? For levels, we use the bodies. For buy and sell setups, it's the wicks, right? It's the wicks. It is the full range of that candle, right? Our entry would be below the low of this wick with our stop above the high of this wick, right? So my question to you all, C3 is, why is it called a signal bar? Because it's signaling to us that there's a potential trade in that direction, right? We have been waiting for a push down into an area, a rally up into resistance, right? Or a rally up that establishes resistance. And then we see the color change down, right? And color change the topping tail, right? And it's just a doji, but really what you can see is the color change. It goes from green to red here, right? So this middle bar ends up being, this middle candle ends up being our signal bar, right? That ends up being the signal bar that we are going to use when you look at this trade. And the candle that enters us is the entry bar, right? So that middle bar is the one that signals to us that a trade is coming, but we wait for it to confirm, to close, aka letting it confirm. Okay, bonus question. What time frame do you all think? Okay, there's too many. You guys, again, please, some of these questions, please save till afterwards. Entry bar needs to confirm the signal bar. Right. Entry bar will break. And so that's how you use it for the actual entrance, right? So you guessing 2 or 5 minute. What time frame do you think this is? What time frame do you think it is? 5 minute, 2 minute, 15 minute for day trades, 5, 2, 5. Excellent guesses. You're all wrong as hell. Even Mike was wrong who said daily. Even Danny G. Yeah, you're wrong as hell. Woo! Oh man, it's a weekly chart. So imagine you're able to catch a sell setup on a weekly chart using one candle as your stop loss, right? And from there, able to capture a giant weekly chart move, right? Let me get into this down here. All right, where is this one? Because I know it's right here somewhere. Where are you? I know it's the ZM weekly. Where is it? Oh my goodness, where is it? I forget where on this chart. This thing's in such a strong downtrend. There's so many sell setups. Remind myself what it looks like. 2-bar rally and then a wick higher. Is it marked right here? November 2021. Where's the 2-bar rally though? Oh, I'm on the daily. Oh my gosh, dude, why didn't somebody tell me that earlier? Oh my gosh, that's all. That was the problem. Okay, here we go. Here we go. Right, here we go. Okay, so I highlighted a weekly sell setup from here back when Zoom was already down from 500 to 250, meaning this strategy is still applicable and still in play all the way down here. But you were seeing weekly sell setups taking place at a much earlier time on Zoom, right? So I thought it was interesting. Now let's revert back to this one. What about the weekly buy? God damn, I just gave that one away. Dash. I did the same exact thing the last time I gave this lesson. God damn it. This weekly buy took place on NVIDIA right here, back at 140. Guess what? If you had taken that weekly buy with shares, I mean, quick casual 100% return on your shares in the course of like a couple months. Oh, right. Let's say not only that, but your stop loss would have been 10% on the stock, 10% on the stock to potentially make 100% if you use shares. Now, the reason I showed you all those weekly time frame ones is because one, they were clean examples of a buy and a sell setup, but this stuff is applicable on every time frame, and this is what we use. Our strategy, the one that we all now including you all, the one that we use, our strategy is all linked together through these time frames, right? Because for me, I'm looking at weekly buy and sell setups as the thesis of my trade, right? But for an entry on my trade, am I going to be using, you know, this weekly candle and buy as soon as the week opens, just market buy? I mean, maybe that might have worked in this particular example. And then keep myself there? No, probably not. I'm going to use this as a thesis to develop my trade ideas, develop where I think we might go, right? Stalking NVIDIA after the all-time high break for a pullback and a weekly buy setup to trigger. So you have it. Oh, move up here, 2-bar pullback, weekly buy setup, unconventional looking, right? And this is a good example of why that buy setups will not always be picture perfect like this one here or like the Zoom one I showed in there. They're not always going to be that way, but they work, right? Right here, you see a buy setup eventually trigger right there after a 2-bar pullback. You end up catching a move from 200 to 230 before we get any sort of reason to close that trade based on the weekly chart, right? Then right here, you see another pullback. But Jake, what about this green candle right here? What about this green candle right here, Jake? What about it? What the fuck about it? What doesn't happen here? Why do I have no interest in this green candle? I mean, hey, we had a strong move up, 2 bars, pulled back, and then a big green bar right here. Closed lower. Jay Cho, Justin, Rick, boom, boom, bing, bang, boom. Exactly. We never take out its high. In theory, it's on heavy watch, right? Because if we were to break above this candle's high, then it's triggered and we're good, right? Granted, it's a little bit closer to the swing highs than I would have wanted it to be, but it technically triggers the weekly buy as soon as it breaks above that high. What doesn't happen? We don't break above the high. That is why we wait for our signal bar to close and the entry bar to trigger. You got to wait for the trigger. If you just take the signal bar, right, there will be times, plenty of times, that you get trapped and you get forced out of positions because the charts looks like it could provide a signal bar, but then fails, right? And then it fails, and then breaks down, and you never had a chance to get out, right? So again, back to our definition of a buy setup. During an uptrend, we wait for a pullback to establish a support level, right? Boom, this green candle does that. What's the exact level? We'll get that from the hourly next lesson, right? What's the exact level here? But we don't know, right? But it pulls back, establishes support. Check, right? All right, during an uptrend, so we're gonna go back. During an uptrend, wait for a pullback. 1, 2, 3 bar pullback. Check. Wait to establish support. Check. Third part, break above that candle's high. No check. No trade. Right? Big thing. Details matter. Right? And again, right? If you are watching, let me clarify something that I think will be important here. Right? Let's look at this NVIDIA down here, where NVIDIA pulls, it has this candle, then pulls back out of the bar. Then we get this green hammer at a really nice area, kind of this former resistance area that we close above it, right? We get our Uno reverse kind of coming into play a little bit here, especially based on where this candle closed, right? So then let's say you're interested in taking the weekly buy setup, right? Let's say you're interested in taking the weekly buy setup. Are you going to wait for the break above this candle's high and trade it off of a weekly time frame as your entry and exits if you're day trading the weekly expiration charts? No, probably not, right? Probably not. Because it just, the weekly charts are bigger. It's bigger, right? You're going to have to buy, this is like between 208 and 214. Weekly expiration options would be at a totally different price, you know, by from that range from 207 to 214. Shares, however, it's not that big of a deal, right? So the reason I showed you this all on the weekly frame is to show you the power and strength of these informing your theses and your ideas. However, when we drill down for entries, it's more likely that we are going to find the entries from those trades off of a 5-minute buy setup, right? Off of something where we say, okay, hey, you know, let's say that this action happened, right? Then all of a sudden on this day, we want to say, okay, let's drill down to a 5-minute NVIDIA chart. And I'm going to wait for a 5-minute buy setup, right? Something that pushes, has a strong open, it holds above the open, rises up, pulls back, establishes support. Then you take the 5-minute buy setup as your entry, because on a 5-minute buy setup, rather than your stop loss being $6 or $7, right? Rather than your stop loss being $6 or $7, your stop loss might be 50 cents on a 5-minute buy setup. All of a sudden, that becomes much more tolerable as a loss, right? Than it does then. But that being said, that's if you're day trading. If you had chose to take a longer swing on this, you would want to let the weekly chart truly play out so that you can to let your idea really work, right? This all again ties back to everything that we were talking about a little bit above, right? Which is that I won't go back to our rules. All candles are applicable. All analysis is applicable on all time frames, right? But it's just the difference in how you'll use it, right? The way that you would use a 2-minute buy setup or a 2-minute sell setup is going to be a lot different than the way that you would play a weekly buy setup or a weekly sell setup, right? If you're examining it on a weekly chart, you are going to be looking for swing trades, maybe share type of plays, right? As opposed to on 2 or 5 minutes, those are going to be scalps, right? The other thing I'll say is that because smaller time frames have so many more candles, right? Like there's thousands of 5-minute candles. I don't know if that's true. There's hundreds of, I don't know. There's a lot of 5-minute candles inside of one weekly candle, right? So a weekly buy setup is much more likely to succeed and work than, like, I'm not saying that a 5-minute buy setup is unlikely to work. It's just that throughout the course of the day, you're going to see failed 5-minute buys. Something's extended to the upside and it fails the 5-minute buy setup, doesn't work, so it stays pulling back, right? That doesn't affect the weekly buy or anything. That's just on an intraday frame, right? So let's drill down into something. And Junior, I saw your question, and Mike, Ron, thank you both for answering that one, because that was going to be a big one. And then also Tony, for longer out swings, I like to do whatever that month's expiration contract is usually, but we'll talk more about that in the picking the contract stuff section. Let's look at an NVIDIA 15-minute time frame for today, right? NVIDIA opened up today, right? And on a 15-minute time frame here, buy setups worked pretty much throughout the entire day, taking a long above this candle's high with a stop below its low, right? That would have ended up working. Then we see NVIDIA gets a 1 bar, 2 bar, 3 bar pullback, before triggering a buy setup right here, right? And that ends up not working right away immediately, but ends up working. Pull back here, buy setup there. This is one that, again, later in the day, the market's been moving a while. This ones are less likely to be at, like this one, I'm not surprised that this one didn't work as much, even though if you took it over its high and got a trim off over this swing high, you still had a nice trade, right? But that was a valid buy setup that triggered. It just didn't get a whole lot of follow through, right? Then down here, you could argue that we've kind of flipped into a downtrend, but not really. In my opinion here, it's still kind of strong in an uptrend. So on this pivot, we have another 15-minute buy that triggers over this candle's high, right? So you can see this play out on a 15-minute frame. And you drill down. I looked at the 5-minute for NVIDIA. It was messy today. It was messy because there was a couple of failed 5-minute buys. And this, it comes along with choppy action, right? Like part of this rationale reason is why it was NVIDIA choppy today. Well, because it was fighting a tough daily chart, right? It was pretty much fighting a daily chart that was looking to break down beneath 2 inside bars lows, which should have gotten continuation down, right? So it was rangy, choppy action today. So something like a 5-minute, there was plenty of traps on intraday buy setups where you could have gotten stopped out, right? Where you could have gotten, stopped down. But I hope it's all a little bit clear to you all where these buy and sell setups come from and what they mean, right? And what they are and how we can use those for our entries, right? Okay, let me flip back to mRNA really quickly and pull up the question box. So 5-minute buy means you're watching for a 1, 2, 3 setup on the 5-minute for a day trade. Yes and no, Kendall, because a 5-minute buy, like we talked about, is not going to be a picture perfect 1, 2, 3 pattern every time. Do you wait? Do you only want the entry bar to break the previous high or low or close above the high or low of the candle? So we're going to talk about that a lot right now, but for me, it's the break above the high or the low of the candle because we waited for the signal bar to close, right? That's the bar that we waited for to close. So by us waiting for the signal bar to close, right, we can use that as our reference point. We don't also need to wait for the entry bar to close, right? Okay, so with that, the other thing that I wanted to do is I drew these sort of boxes out myself, which is sort of define the structure of what a few buy and sell setups might look like, right? These look a lot less pretty now than how they did. This one's supposed to have a little red box there than how they did when I first drew them. They still don't look very good, obviously, honestly. But see here, we have a green candle, sort of a push up. It establishes some sort of resistance here. But we are still in a strong uptrend. We're still holding this previous higher low, assuming that's the higher low because we have no data before it, right? Get a bar there, a bar pull back, and it's this candle that flips. Why is this so? Why can't it be in the middle? I hate this. This line can't be in the middle of this box, and it's really annoying. But imagine that's just a little wick tail. I'm sorry, this is my little way of hand drawing these. But it's right here, again, as you can see, and as we've talked about, this is where you would take our entries, right? With our stop beneath there. So in perfect worlds, you do want to make sure, you do want to see that the swing high is at least far enough away that you could trim part of your position, with a good risk reward. Have a good risk reward by placing your stop below where the low of that bar is, right? So a sell setup here would come and have the same idea. Downtrend, rally up and establish resistance and a break beneath the previous bar's low. Now, here's where things can get a little tricky. Here's where things can get a little bit tricky, which is that what I love to see in my ideal buy and sell setups, and we're going way over time. We're gonna have to move failures back a little bit. What I like to see is with color buy and sell setups, meaning I like when the pullback, I like when this candle closes green, right? Meaning that I can buy the break of that green bar's high, right? Does that make sense to everybody? Now, in this example, you can see the bar that breaks beneath the previous bar's low is a green one, right? This is an opposite break here on a, let me actually pull these. I can't put them next to each other because I'd have to move all three of them. But I'm going to be looking and focusing on these two right here. So let me drag this over. All right, so let's focus on these two for a quick second. If we're focused on these two, do we see the difference? Just say yes if you see the difference between these two cell setups. And I know that these pictures aren't very great. But the main difference being this one triggers on a green bar, this one triggers on a red bar. Does everybody see that? I just want a few yeses. Julian, send the picture. I see your question, Julian. Send the picture in the chat. I just don't want to stop in the middle of the lesson to like check Netflix or something right now. But I will answer it in the Discord. So send it away. All right, everybody understands the difference, right? Okay, cool. Everybody sees the difference. I understand it, okay. But everybody sees the difference. So in perfect worlds, and the market is hardly ever a perfect world, but in perfect worlds, I prefer with color entries, meaning I prefer my signal bar to be the color that I'm hoping the trade goes. If it's short, I want the signal bar to be red. If I'm going long, I would like the signal bar to be green, right? That's in preference, right? That is a dream scenario, so to speak, right? However, the market doesn't always happen that way, especially because the market loves to trap people. So here's here's what I've found is that plenty of times there will be sell setups that trigger right here on the break of this previous bar's low, right? This sell setup this candle will trigger it as soon as we break it, right? But I don't want my signal bar to be this big green like hammer up here at the highs necessarily, because that's not really like a clean signal bar to me. So in these examples, what I will do is I will wait for the bar to at least close beneath the previous bar's low, right? Because if you just take it on the break, technically this candle could fail that break lower and reverse back higher, right? And it never really gave us a clean signal to enter. So for me, that's why I've moved this arrow here, right? You can see this on this chart right here. And let me make this arrow even a little bit more clear. On this arrow here, we are entering as soon as we break beneath the signal bar's low. That's where this little P&L tool is telling us to enter the trade, right? As soon as we break below the signal bar's low. This one is telling us to enter at the low of this candle, which means that we wait for it to close, right? That's the thing for me. I prefer to wait for it to close. Does that make sense? And if it doesn't, I totally get it because it can be confusing. So we'll cover that in text a lot more with examples in the chat. You all are I'm sure going to be sending pictures and stuff. But just give me, if it would make me feel a lot better, just a few yeses. I'm not recording or anything. I just want to see it. Okay, Annette, no worries. This one is a lot of info. Okay. No, couple no's. Okay, couple no's confusing. Okay, so no worries. I'm going to go through this one more time, even though we understand, because we're trailing near the end of the lesson either. For the stop loss, do we close on the break or candle close at the pre-low? For stopping out on this, that's going to be a question that is going to be asked till the end of time. You know, do you stop out as soon as it breaks, or do you let the candle close? I like to let the candle close, but technically you can do it on the break, and it depends how aggressive it is, right? Like let's say I bought a long right here on this candle, and the next one slammed through it like really aggressively, then I'd just sell. Let's say it just like wicks through a little bit, not as much. Then I would wait till the candle closed before stopping out. But the main question has been about these two examples right here, right? This example, which are, so I see some people are confused, some people know. So I see Rick, no, and I'm not trying to call you out. I'm going to ask you all another question to follow up with it. C3 Trader, Rick, Annette, Kendall. So do you understand let me rephrase the first part of the question. Do you understand that these are both sell setups, right? Just give me yeses on that. You understand the concepts of these being sell setups, right? I know it might be a little confusing, but you understand the concepts, right? Okay, cool. Now, the difference, do you understand the difference between these two sell setups? Being that this one, let me move this P&L tool out. This one, let's make this. Okay, Kendall, we're gonna talk later, dude, because I love you, but you're a little behind on this one so far. Yes, we ideally, in a perfect world, want our signal bar to be the same color, right? So you can see here, right, where The difference between these two style setups, while they are both cell setups, this one right here, the bottom one is ideal, right? Because same for exactly what Kaylin just said. We want our signal bar to be same color in perfect world. World is not usually perfect, fam. So we can't, I don't want you to find that as a hard rule, but I do want to clarify this. And when we enter the trade on this signal bar right here, you can see where this arrow is pointed to, is we enter as soon as we break beneath the low of our signal bar. So let me draw right here, signal bar, and make it 610. This is our signal bar. And this is our entry bar right here, right? Entry bar. So we are taking this entry as soon as we break beneath the lows, of our signal bar, right? As soon as we break beneath there on there, because that's the definition of cell set. That's ideal situation. That's number one, so to speak, right? That's number one. So for everyone who was C3 and Rick were a little confused in the earlier explanation. That's ideal world, right? Same color. In this example, these are not same color. This green bar right here would technically be the signal bar, right? And this red bar would technically be the entry bar, right? Now, because our colors were the same here on signal and entry bar, we took the entry as soon as we broke beneath the signal bar's low, right? And let me type that as well, just because I think it's important for it to see. Since our signal bars are same color, we take entry on break of signal bar low. I've actually never just written it out like this, and I don't understand why, because this would have just made it probably easier to understand from the previous class too. Since our signal bar and entry bar are different colors, we wait for close of entry bar to enter position. Okay, so does that make a little bit more sense to the people who had the earlier questions? Does that make okay, cool. Perfect. Okay. So that's the firm sort of rule, right? In a perfect world, and again, in a perfect world, all of our entries would be off same color signal bars and entry bars, but the world's not perfect and the market's not like that. What I will say though, is that if you see this, where we just slam beneath this, the green bar's lows, right? And this is a 5-minute chart. On a 2-minute chart, there may have been another clue that might happen, right? Or on a different time frame, there might be another clue. Rick, great question. How did we know this is the green one's the signal bar? That is exactly why I wait for this candle to close, for me at least, right? Because even though we're technically triggering the sell setup on the break below this low here, right? Who's to say it doesn't just stop and wick back up? Because this green candle doesn't really look like a signal bar to me, right? The only reason it is our signal bar is because we break and accept beneath its low, right? So that for me is why I wait for the close. For these activities, because we don't know. Here, it's very clear. The signal bar is the inverted hammer. In a downtrend, inverted hammer, right? Inverted hammer in a downtrend. Very clear reason why that's a bearish candle and why we would be looking to short on that one. This one, it's not so much. It's just a strong green trend bar, even though we're in a downtrend, right? So it's the breaking close beneath its low that does it. So for me, Gabriel, my stop on this trade, usually they'll be right next to each other, right? But I would keep it, if the green bar has a little tail or something up there. Oops, I'll mute. Sorry about that. Oh. No worries, I got it. Rob, you unmuted for a second, but no worries. We or somebody, it wasn't. I don't know. Somebody. We got you though. We got you. We're good. All right, but let me see what I was saying. Oh, stop loss. Thank you, Gabriel. The stop loss. So let's say that there was a little, let's say there was a little tail on this candle here. I would post it. I would put my stop loss above I would mentally keep it above the higher, because it's probably such a small difference between these two numbers, you know, that I would really want to let the trade work and give it that room above the green bar's high, as opposed to the high of the trend bar. Okay, everybody, that was a shit ton of information. Julian, I see your message about having found some in the chat. I don't want to go through and do examples and stuff right now because we're in lesson mode, right? Presentation lesson mode right now, less so than that. But believe me, you will see plenty of these examples throughout the day because they are always happening, right? And we unfortunately are going to save the failure stuff until next time, just because I got to get ready for bed to be up and ready to active to trade tomorrow. We're going to talk about the failure patterns and with the levels as well. But what you'll find, Julian, is that the market is always moving with buy and sell setups, right? Because it's always trending or ranging. Whenever it's trending, there are constantly going to be buy and sell setups, right? You look at something like on a 5-minute basis, let's go mRNA on a 5-minute basis. There's a variety of nice buy setup examples on today's chart, right? Technically, right? Let's look at mRNA, for example. Strong move up earlier in the morning, right? We're developing an uptrend, especially breaking above previous higes. Not ideal because it could be failing, but this is a very strong uptrend, right? We get a pullback here, pullback there, pullback there. This is a good kind of example. This green bar here, our signal bar and our entry bar are not the same color. So for me, I would have waited for this green bar to close. With it closing right at the previous candles, you can make a judgment call, potentially enter that trade. It's kind of up to you at that point. But for me, I probably would have waited, and I probably just would have sat back on my hands and said, I don't love the color change, not getting above and closing above previous candles highs. So I'm going to wait, right? Granted, this trade would have never actually stopped out, right? If you have the swing low right there, and again, if we enter on the break of this candle's high, we would put the stop beneath this candle's low, but I don't love this as an entry based on the fact that it's the opposite colors on that. So what do we do instead? We wait a little, another pullback, but boom, all of a sudden here we get another thing lining up for a potential entry. Again, this is not a color coordinated, this is not same color entry and signal bar. So I would wait for it to close, and this one triggers right away immediately after the break above here, and you can see afterwards we get the strong move up. Right now, buy and sell setups are more of an art than they are a science, because if you try and take every 5-minute buy and sell setup, you will lose. There's a shit ton of them in every single day. Some of them fail. You're going to get stopped out before something reverses back up. Please do not go out tomorrow taking every 5 and 2-minute buy and sell setup. Please, please, please. If anything, focus on the 15-minute or the hourly on the daily, because those will give you much more stress-free buy and sell setups as opposed to 5 and 2-minute charts, right? But these are you'll see a lot of them that work. You'll see a lot of them that play out like all the time, right? And you're going to see, we're going to talk a lot in the next lesson about, we're going to do levels and failure setups. Yeah, I don't know how we're going to fit that all into one, but we're going to do it. Or we might move failures into the last one. But regardless, these buy and sell setups are happening like at all times, right? Like if you flip to a 2-minute chart on something, right? Here, we get a push up, we get a push up, and do an uptrend. Here, technically, we start triggering a sell setup, actually, because we're depending on your definition of, are we holding this uptrend, or did we make a new lower low, right? There's a ton of different 2-minute sell setups throughout the day. So please do not go out hammering every 2-minute sell setup we see. If you were being the most patient and disciplined trader in the world, which we're close and we're very patient and disciplined, but we are not like, I am not like the most patient disciplined traders in the world are the guys who take like one trade every 2 weeks, right? Or something like that. What we would do and what we would wait for is we would use the level system, which we'll talk about next lesson. And we only take a buy or a sell setup off of a level, right? Because if you're going to try and take all these different buy setups throughout the day, you're going to be watching a shit ton of different things. You're going to get cross-eyed. It's just going to be too much, right? So having a buy or a sell setup off a level, or even better, off the level's better, but off the open, off an open print pullback. Oh, like Nvidia, a little bit today, right? And again, this one was a little bit funky because there was a 2-minute chart. It did have one failed 5-minute buy before it worked. Yeah, but this buy setup right here off of the open, off of a retest of the open, gorgeous, right? Gorgeous, right? Again, you did see potentially a chance to get a little bit of a stop right there. So that's what I mean by saying that not everything, you aren't meant to hammer every buy or sell setup, because they will not always all work. But off of a level, off of a reference point, all of a sudden there's all these different things lining up. We just pulled back here and we wicked the open. So that gives me more validity and more strength, in my opinion, on this particular buy setup to take the entry above this candle's high, right? And it did go red there for a second in terms of coming back down, but it never really even did anything that just continued to rocket and give a very clean, strong move up into 189.30, right? And that was because it came down, was a pullback setup off of the level, right? So the combination of buy and sell setups on the 15 minutes are great. The 15-minute is very much more consistent, especially intraday. Oh man, early first hour, I'm all about the 5s and 2s, usually 2 within a 5, and we'll talk about that next time. But intraday, I love the 15. 15 is very stable, right? You look at this 15-minute on mRNA, clean, right? Or that's the 5, a little choppy. 15, clean, right? Clean. Right? You look at something like Tesla today, 15-minute, clean, right? Clean. So, all right, man, we have gone way over on what I meant to talk about with buy and sell setups, just from a timing perspective, because I was also meant to fit in a few more things on this one. But we got to end it here. We're at 1 hour and 45 minutes. This is a very good lesson. I know that I just overwhelmed you all with a lot of information. And a lot of specific nuances, right? Some of it may seem familiar again, but I promise you, when I said earlier on that I use the simple stuff that you learned in the very beginning, just in a way that you've never learned, you've never used it before, this is what I mean, right? My examinations of higher lows, higher lows, trend analysis, my trend structure is different than most people who analyze trend, right? Because everything that we broke down on a daily time frame there is applicable on a 5-minute frame as well, right? Pushed up into a higher high. If we were marking this out here, we'd do HH. We do PHL here. And that'd be okay, HH. And what happens when this becomes a confirmed HH? This becomes a confirmed HL, right? This is no longer a potential higher low. We broke over this high. This is a confirmed higher low, right? Now I'm going to go ahead and mark this here. PLH, right? So this is your homework for you all. I want you to go on these charts and start marking higher highs, lower lows, lower highs, lower lows, all that, along with the potential buy setups, and do they work or fail? Do not go slamming buy and sell setups tomorrow. If someone gets mad because like, I took a buy setup and it failed, it didn't work and I lost money, I'm gonna be pissed because you took a buy setup, but you don't know how to do the levels yet. And I'm not saying you can't take them, right? But understand that knowing where they are in relation to the levels is a huge portion of this, right? Everything ties together. It's all very like I've been saying since the beginning. It's all very calculated. So that's it for tonight. I am very hopeful that I need to get this out of full screen. I keep popping up the chat and it goes to full screen. Okay, there we go. I am very hopeful that you will have to watch this all multiple more times, right? I think that you all will have to at least watch this a few more times before fully grasping it. But I I'm very hopeful for those of you that were hoping for more technical stuff in the first few lessons, that you're like, oh shit, this guy knows what he's talking about now, right? This guy really, he knows what he's talking about, right? I'm not here to feed you fluff. This is the strategy. It's simple, but it works. Simple, but it works. Okay. All right. Give me one yell in the chat if you enjoyed the lesson. Just tell me that you enjoyed it. You had a good time. This was a good lesson. Woo, woo, woo. Yeah. Buy and sell setups is epic. Awesome. Okay. Thank you all very, very much. With that, I saw somebody say post the recording soon. This one will probably take a couple hours to process. And if I'm asleep, but I'll post it first thing in the morning. All right. Okay. All right, everybody. Hope you all had a great lesson, and we'll see you all tomorrow in the chat. All right. Cheers, team. Yes, Manuel, I will post the slides.